Good afternoon, everybody. Welcome to the Armor Report. I'm your host, Brett Rosenthal. As always, this is a show about stock market investing. This is a live trading desk. All the information I'm going to share with you comes directly off my trading desk. I'm surrounded by screens right now. I have trades on, multiple trades on that are intraday in nature, but what we primarily do here is build equity portfolios that can dramatically increase wealth over a period of 3 to 5 and even 10 years or longer. And I'm going to get into that in a minute. I like to say this is not your granddad's market. It's not your dad's market. Since 2008, we had a major change in the way equity markets behave based on central bank intervention. Years where the central banks adding liquidity, reducing rates, markets levitate. Years where central banks are doing something else, markets are jumbled. During the levitation, you could be a passive investor. You make money, the whole market goes up. 2018 ushered in a new era, new Fed chair, new responsibilities, reducing the balance sheet, raising rates. It made for a terrible year in the market. Our 3 model portfolios that we have at Interactive Brokers, that's where we run all of our business, my own personal capital and that of our clients. All 3 model portfolios dramatically outperformed every index. Active portfolio management will be critical going forward. So to start every show, I like to go over what our top 5 algorithms on the top 5 indexes are telling us about risk on or risk off. So we're looking at the S&P, the Dow, the NASDAQ 100, the small cap index, and the momentum index. We have algorithms designed for the volatility of each index. We use these algorithms and these indexes to tell us when to be aggressively long, when to be short, and then how to manage cash in between. We are at an in-between moment right now. We're not aggressively long. We're certainly not short anymore. Not at the moment. That could change. And we've got about 50% of our capital working. In a market like this, we put our capital to work in investment themes that are at the very top of our whiteboard. And we're going to discuss one today. I title this Investing in Cannabis Part 1. We're going to talk about the marijuana, cannabis, hemp, pot, whatever you want to call it. It's an investing super cycle that we're on the cusp of. And I'm going to get into that in a minute. But before I do, let's just get to our allocation. We are roughly 50% long. You can go look at our website, rosenthalcapital.com, and you'll see our model portfolios. And you can see basically what our mix is in each model portfolio: conservative, balanced, and aggressive. If you want to know what stocks we own, then obviously you have to work with us. I'm not in the process of or business of telling complete strangers how to manage a portfolio all the way down to what stocks to buy, right? It depends on your own risk tolerance and the type of investor you are. So on our website, we're just trying to give you a feeling for how we use our algorithms to manage risk in our portfolios. And it can mean different things to different investors. Just because we happen to have 50+% cash in a portfolio, that might be what's, a conservative position for us. Maybe only 10% cash is conservative for you. Maybe you like to be 90% invested all the time. Okay, great. Be 90%. I'm not going to tell you how to manage your own assets. I don't know you. But I would say when our top 5 algorithms are telling us risk off, it's best to hold whatever amount of cash you're comfortable holding to protect your capital. And we're still in that phase. So we dramatically outperformed last year because of our risk management techniques. So far this year, we're underperforming, right? Because we're not aggressively long and the market ripped in January. Our algorithms are not about day trading. They're not about getting you in for quick rips. What we're looking for, and our algorithms are calibrated to help us add risk when the probabilities are at their highest that we'll be successful, and when the reward is big enough for the risk we're taking. And when the volatility is this enormous in the market, the risk is too big in many instances for us to get aggressively long. We need a different setup in the market. And what we'll do instead is we'll be more active intraday, whether short or long, because the volatility is there. When you have a grinding higher bull market, volatility gets small, and intraday trading activity is kind of pointless. During 2018, intraday activity was phenomenal because volatility was back. And it looks like that's continuing in 2019. So we keep looking for intraday activity and opportunities. Okay, let's move on then to our main topic of the day. We are at the very beginning of a cannabis, hemp, pot, marijuana investing super cycle. It's a super cycle. What's a super cycle? A super cycle means that let me rewind a little bit. I'm going to explain what a super cycle means, but let me tell you how I know that we're at the beginning of an investing super cycle. And then I'll explain what a super cycle is. I've been doing this professionally for over 30 years. This is my gift to you. Blood, sweat, tears, success. I've been through it all in the last 3 decades. And I've been investing personally even longer than that. Investing's in my blood. I can remember as far back as a, 5, 6, 7, 8, 9-year-old kid sitting around the dinner table as my dad would walk us through investment ideas because he lives, sleeps, eats, his hobby, everything he does is about investing. It has been since he was a kid. He managed money for 50 years on Wall Street and worked with major institutions, Fidelity, Putnam, Vanguard, all the big names. And I can remember, as far back as my memory goes, sitting around the table being taught how to identify investing super cycles and then building portfolios around that cycle, that theme, and building net worth. I am going to build my next fortune on these cannabis stocks. That's how strong this investment opportunity is. I invite you to join me. Let me tell you how I know. Over the last 30 years, I have been privileged enough to witness a number of investing super cycles. Let me tell you what a super cycle is not. Let's start there. I have no interest in investing in companies that are in cyclical businesses. Can you make money in them? Sure. Can you buy General Motors at the right time and it has a decent run? Fine. You can buy a housing stock, make some money. I have no interest in doing that. To me, investing is about opportunity cost of money. I only have so many dollars. And what I want to do is put the capital where I feel the reward is dramatically worth the risk. So here I have 2 investments, right? I got someone telling me, go buy Micron. It's got a cheap PE. Please don't get me started on that. I'll go into PEs later. PEs are a complete waste of time, okay? What you want is intellectual property. I digress. So someone says, oh, buy Micron. It's a cyclical business. Sometimes the stock runs up when there's a shortage of DRAM, then the stock sells off. It will never change, even though somebody keeps whispering in your ear that it will change. Those cycles, I don't care about. Can you make some money on NVIDIA because it runs up huge on the back of cybersecurity? Whatever. Sure. Or crypto? Great. And then it crashes. I'm not looking for those type of cycles. For my capital, what an investing super cycle is getting involved in a new investment theme and doing it in front of major institutional sponsorship. I'll explain that. Institutions, major pension plans, profit-sharing plans, endowments, Fidelity, Dreyfus, all these big names, those billions of dollars are what puts stocks up over a series of months, years. It's not individuals putting money to work in an idea. It's when institutions acknowledge a new investing theme and decide to invest in the space billions of dollars. So our job is to figure out what the theme is and get involved early so as they come into that theme, we benefit from the rise of stocks. Let me take you down a walk down my memory lane. I got into the business in 1993 professionally, right out of college. I was actually doing it in college. I worked 3 days a week, went to school twice a week. And in 1993, maybe you all can remember what this was. It's an investing super cycle at the time. At the beginning, the super cycle that I first witnessed was the investment cycle into internet stocks. Now, I joined my dad right out of college. And at the time, my dad was managing, and I joined him, so I like to pretend that I was managing, but really it was my dad at the time. I just got out of school, was managing the largest equity business in the country for high net worth investors at Lehman Brothers, before the name Lehman was a bad name. Lehman was considered one of the best companies in the business in 1993. My dad was managing capital, represented the largest equity business for high net worth investors. And my dad taught me early the value of doing research on companies on your own, not reading research reports that were written 3 months ago, but literally getting on the phone, pounding the pavement, talking to management, breaking down balance sheets and income statements. He taught me early, find a theme before institutions are coming in, find the biggest beneficiaries of that theme, and invest in that space. That's how you create wealth. So the first experience I had in this regard, we flew out to Monterey, California in 1993 for an investment conference called the American Electronics Association. And at that conference were all kinds of technology companies, and a big component were new internet companies. Nobody had even really understood the internet story in 1993. People were still opening, just to put it in terms you'll understand, people were still opening their mail with this, right? Not this. Nobody knew what this was, okay? This is how they opened the mail in 1993. I sat down with the management team of a company. It sounded like the greatest investment story I'd ever heard in my life. So I came out and I said to my dad, Dad, you have got to listen to this management team. Please go sit down and talk to these guys. See, this was a conference. There was a whole bunch of technology companies. So we were dividing and conquering. My dad was covering other companies and I was covering the internet stocks because I thought they were interesting. My dad said, okay, I'll go listen. But he had a bit of a smile on his face. Kind of patted me on the head at the time because I said to him, this is the greatest investment idea I've ever heard of in my life. And it was, of course, let's be honest, it was the first, right? It was my first idea. I just got into the business. So what do I know? But I said to my dad, I said, I'll tell you what I know, Pop. Don't be condescending. I'll tell you what I know. I sat around the dinner table when you told me about the investing theme, the super cycle that you got on early in your career that made your bones. You told me, Dad, that when TVs went from black and white to color, CBS became the greatest investment idea of a generation. Because you understood, having met with management, that by going to color, there would be a lot more eyeballs watching TV, and CBS will be able to charge more for advertising. Earnings and revenue expansion would follow, and the stock would go up a lot. And what was exciting in that story is that my dad was one of the only guys knocking on the door of management of CBS, sitting down and talking to guys who were running shows that could help him understand the importance of color and what was happening in the business. That led to a huge stock that created significant wealth for the Rosenthal family. And at the time, my dad was working with institutions. So he went all around Boston and all these in New York, talking to big pension plans and institutions and investing in CBS. It literally made his name on Wall Street. I said, Dad, the company I just met is creating a website, has a website, where everyone's going to be opening their mail. Everyone's going to get their news, whether it be sports stories or what have you. It's a community on this website. And it's a simple eyeball game. They're just grabbing eyeballs and they can charge advertising revenue. And the business is literally exploding. So my dad said, okay, relax. I'll go listen. So anyway, he came out of that meeting. Can you guys guess what stock that was? Anybody have an idea? You could name a lot of ideas, but I'll tell you what it was. The name of that company was Yahoo. In 1993, stock was $30 a share. In 7 years, the stock was $450 a share. That's a 3,000% return, guys. It was up 30 times in 7 years. That's how you build wealth. Getting involved in an investing super cycle when people still don't understand the business, when it's just starting to get underway. That's an investing super cycle. And of course, there's a whole bunch of other names you could mention. The internet boom has been going on for, I guess, 30 years, right? That's just one example at the beginning of a super cycle. Let's fast forward to another example. At the turn of the century, 2000, there was much fanfare over the excitement about scientists mapping the human genome. At the time, we'd moved our business to Prudential Securities, and now I can honestly say I was part of this. We were managing the largest equity business in the country for high net worth investors, Prudential Securities, subsequently taken over by Wachovia and Wells Fargo. We were still at the top. We met management of a company that we identified that we thought would be the single biggest beneficiary of the genetics mapping super cycle campaign that was unfolding in front of us, an investing super cycle after the genome had been mapped. We met with the guy in our office in New York. We had 3 meetings with him. Each time he walked out of that meeting, we looked at each other, my dad and I, and we thought it was the greatest idea we ever heard of, but we couldn't understand a word he said. It's all scientific. So we had him come back and meet us again. Every time he was in New York, he'd sit down, he'd explain the story to us. This is 2000, 2001, 2002. 2003, we were buying the stock. Could have been 2001 we were buying the stock. 2002. No, I think it was 2003. The stock on a split adjusted basis was trading at $3.50. This was the company that was literally making the machines. Let's think of like a Xerox business. They were making the machine that was taking that human genome map and helping drug companies identify markers to create drugs on. So it was like a Xerox business. It's easy to understand. They're selling the machines, and then they have consumables like ink for Xerox, but in this case, consumables for the genetics testing business that had very high margins. So when they had enough copiers in the market, their earnings and revenue exploded, margins exploded because of their consumable business. 2003, we were buying the stock, $3.50. 15 years later, the stock hit a high of $370 a share. That's 10,000+% return on money over 15 years. That is how you create wealth. You identify an investing super cycle theme. You step in early and you identify the companies. Excuse me. No. That are best situated to benefit from the investing super cycle. The name of this company was Illumina. ILMN is the symbol. Go look it up. I know a thing or two about investing super cycles. I've been there. I've participated. It's a paradigmatic shift in a business. And you find the most dominant players. Cannabis is at the very beginning of that cycle. There's been a paradigmatic shift in how people view the hemp plant. August 15th was the watershed event. Constellation Brands, $4 billion in the canopy. Follow that with $1.8 billion from Altria and Kronos. And we know it's game on. What's unique about this investment super cycle that's different than internet or genetics? Basically two things. Number one, you can argue that genetics and the internet were two difficult concepts to grasp at the very beginning of the investing super cycle. People were still using a letter opener to open mail in 1993. And we didn't really understand at the time how huge the internet was going to be as an impact to our lives. But we thought it was. But it took a lot of work to understand how important that theme was going to be. And God knows when we mapped the human genome in 2000, unless you were a physician, the terminology was like you had to wrap your head around what was going on in human genome sciences, human genomic sciences. It took a lot of effort. Okay, let's leave it at that. I mean, literally, I remember Jay Flatley, the CEO of Illumina, leaving our office after 3 visits. And my dad and I just kept looking at each other saying, that sounds great, but I don't know what he's talking about. We put it into terms we understood. It sounds like a Xerox copier business. I can understand that. He's making the machines and he has consumables, and it's going to lead to hockey stick type of growth and margins. So we got the business, but understanding all the terminology was difficult. Cannabis is easy. We all know marijuana. We've either used it, had fun with it, or our parents are using it to help them. age-related issues. Everybody knows for centuries the value of the hemp plant. We get it. We all get it. There's no one disputing it. And the second, and perhaps most important part of the hemp story, cannabis story that I love, is that the legal situation in the U.S. is muddled to a certain degree. Now it's starting to thaw. We had the Farm Bill. That went our way from a hemp, that really kind of made hemp. That passing of the Farm Bill last year was another watershed event. And this year there's a bill being worked on called the States Bill, where even though the federal government has not decriminalized the hemp plant, marijuana plant, but the federal government, there's a bill in the works called the States Bill to allow states to decide how to handle cannabis, and the federal government will stay out of it. But because of these strange legal rules right now, a lot of the investing public cannot put money into this space. A lot of the institutions won't touch the space. Here's something strange. If a company involved in the hemp business is headquartered in the United States of America and growing in the United States of America, they cannot access capital markets in the US. They have to list their stocks in Canada because of the strange legal environment. If you're a Canadian company located in Canada, growing in Canada, you can access US capital markets. Go figure, right? Because you're not doing something illegal from a federal government standpoint. We are early in this process. By the time we get full legalization in the US, these stocks are going to be up multiples from here. We are at the start of a cannabis investing super cycle. I know I've been through these before. I'm going to build my next fortune on them. And I'm going to do maybe a 3 or 4-part series on what we're doing here on our trading desk to build positions. I will share with you each step of the way what we're doing. There'll be pitfalls. We'll go over that. We'll break down the industry into different segments so you can understand what types of stocks you want to own, covering different segments. I think we'll do that in part 2. Part 2 of the series tomorrow, I'll go over the cannabis space and we'll look at the different segments and the lead. I'm not going to go over individual stocks with you. You're going to have to work with me if you want to know exactly what I'm buying. But I'll go over just in broad strokes what types of businesses we're identifying that we want to be involved in. And then you got to do your own homework. Like I said, work with us if you want to know what stocks we believe will dominate each of those segments, and those are the stocks we'll be accumulating. And then part 3 of the segment, I'm going to go over the pitfalls. Okay, this is not going to be easy. On the way to the 10,000% return in alumina over 15 years, it had multiple 50% corrections. You've got to have a plan to manage risk. This will not be easy. Part of building your wealth in an investing super cycle is managing your risk correctly and not being carried away with the enthusiasm. We have plans for that on our desk. I'll share it with you. So I hope this has been helpful. I appreciate your comments. If you have any questions for me, you can always email me. Go to rosenthalcapital.com. You'll see our email address. I'll be happy to try to address it on future cannabis investing super cycle podcasts and live streams like here on YouTube. And I wish you all the best of luck investing today. Be safe. Be patient. Don't let greed get involved. Don't let your ego get involved. I'll talk to you guys tomorrow. Thanks for being here.